So hi everyone, it's Jordan right back here, and in this video we are continuing with our series about chart patterns, and in this video we are going to be looking at the descending channel. Okay, so the descending channel looks exactly what you're seeing on a screen. The price is locked between two sloping trend lines, and then the price gets locked in. So you can see that here this upper one is a resistance, and then the lower one is a support level. So here you have a support, and then here you have a resistance. So every time the price hits this resistance, it goes back to the support, hit resistance, go back to support, resistance, go back to support. So when that happens, we can get some trading patterns whereby if the price hits a resistance, we make a short trade, and if the price hits the support, we make a long trade, and so on. So the other one would be that if the price is within a channel, it can break above to create a bullish trend, or it can break below to continue within the downtrend to make a continuation signal. Okay. So a descending channel is a chart pattern formed from two downtrend lines. They are drawn above and below the price, representing a resistance and a support level. So the descending channel pattern is also known as a falling channel or a channel down. It is a bearish chart pattern simply because it provides so many bearish trading signals. So you can see that the price is also still showing lower lows and then lower highs. Okay. So with the price goes, it keeps on reducing. That's why we consider it as a bearish pattern. It can also be a bullish reversal when it is broken in a bullish way. You never know. So when in a channel the price are expected to bounce off the upper and the lower boundaries, that's the support and resistance. And then the more such reversals occur, the more reliable the pattern is. So we agreed in videos about support and resistance, and if you didn't watch them, I recommend you go back and watch them. The more the price hits a support level, the stronger this level becomes. So if they hit the resistance around 5 times, it means that is a strong level of resistance, and when it is broken, there is a strong buy signal provided. And if the price breaks below a strong support level, there is a strong short trade that is going to be given. Okay. So a descending channel looks similar to rectangles, but the difference is that descending channels, they slope down. And then in rectangles, we show that if the price is moving high, then it reaches a time and then consolidates. It's locked between a support and resistance, which are horizontal, but here the support and resistance are they are sloping trend lines. Okay. So a descending channel is the exact opposite of the ascending channel. Another way to trade this pattern is to wait for the price to break through either of the trend lines. So if the price, so if you have your channel down like this, or your descending channel, you can wait for the price to come and break through this support to create a continuation signal, or the price can come and break above the resistance to create a buy signal, which is strong. So a breakout above the upper trend line generates a strong signal, and a breakout below the lower trend line generates a strong sell signal. So you have to keep in mind that just like any other chart patterns, these channels might be prone to false or premature breakouts, which means that the price can retreat and then go back into the channel. When the price fails to reach the lower line, it signifies a trend exhaustion. So why? When you are having this channel down, and then the price is coming from a support resistance, and then the price comes and fails to reach this level, and it comes and hits this level of resistance. This shows that the bears have failed to push the price further lower than this previous low, because you can see that here, if the price is $2, here it is expected to be 1, and then here we start to go into negatives. But if the bears fail to push this price below this previous swing low, it shows that the bears are weakening, and therefore we are going to get a reversal very soon. So the direction of the break will determine either if it is going to be a continuation or a reversal signal. So if the price comes and breaks If the price breaks above the resistance, we get a buy signal, therefore a reversal. And if the price breaks below the support, we get a continuation signal, and therefore we get a short trade. Okay. So that is how the descending channel looks like. You can see that here the price is locked between this level of resistance and this support. So these are two trend lines which are drawn, and therefore here we wait for reversals. When the price hits at a support, form a candlestick pattern, we make a buy trade. It's a resistance, makes a candlestick pattern, we make a short trade. It's a support, candlestick pattern, you make a trade. So if you didn't watch my videos about candlestick patterns, I recommend you go back and watch all these candlesticks. So just like that. So if not so, we wait, and if the price comes and then breaks above the resistance, makes a retest, here we expect a reversal, or sometimes the price can come and break through the support, makes a retest and make a continuation trend. Okay. So that's how it looks like on a candlestick chart. And then we have one test, then a second test, and then a third test. When we make three tests on this channel or on this level of support and resistance, it shows that the support and resistance level have become strong and therefore trustable for us to trade with. Okay, so here after this third test, it shows that we have by default to come back to this level. So because here we have tested three times, if we get a candlestick pattern right here, we wait to get a buy trade. If we get a candlestick pattern again, we go short like that until there is a breakout of these trend lines. And when there is a breakout of the trend lines, still we wait to get a short or long trades, depending on which trend line has been broken. So when you look at this chart right here, you can see that here you have a channel. And then on this channel, you can see that here we have our first test, second, here we have our third test. Then here we have our third test. So here it means that we would have made a short trade and then would have been able to catch some few pips going downwards, though this one was not wide enough. But what we would use this one for is to wait for a breakout of this of this um, of this trend line. So you can see that here the price is has been stuck in a downtrend for a long time. So therefore here when we get a, a break above the resistance, it shows that we are generally going to get a strong buy signal. So you can see that here there was a break on this blue candle right here, which closed entirely above this resistance. And then here we have a doji followed by this big bullish candle. So we would have made our entry from here and then be able to catch the wave up. So when you get channels, you can trade the bounce strategies. Price hits when the price hits a support, you make a trade to reach the resistance. Price hits the resistance, make a short trade to hit the support. When it hits the support, long trade to the resistance, and then short trade to the support. When the price breaks below the support, it means that we are going to make a continuation, which is strong. So therefore here we make a short trade. But if the price comes and breaks above the resistance, it shows we are going to get a reversal and therefore we make a long trade. So on this chart, you can see that here we have a short-term trend line. So trend lines could be short-term or they could be long-term. Okay. So for example, here, if we're able to construct one, this one would have been longer. So for example, if this was our channel, okay, this was our channel right here, we could have made this descending channel longer term compared to this one here. So when it is longer term, it becomes stronger, and when it is shorter term, it becomes weaker. So here we have a short term channel, but still it can help us to get some trading signals. So you can see that here the price was in a channel. Okay, here price was in a channel. Then after here the price break out of this upper resistance, we expect to get a buy signal. So you can see that right here we got a break. So our trade would have been right here because preceding dodges we got a big bullish candle, so we would have made our long trade from there, and then be able to catch some wave up. So the point to stress here was that sometimes the channels could be short term, or sometimes the channels could be long term. As long as the channel is tested 3 times, it becomes valid, and the more it is tested, the stronger it becomes. And when we break out of a strong channel, we get a stronger signal compared to when we break out of a short term channel. Okay, so in recap, in a descending channel, still another point would be that in this descending channel, it could be steeper, and then the steeper the channel is, the weaker it is. When the channel is not too steep, it shows that there is stability within this occurring downtrend, compared to when the channel is too steep. When the channel is too steep, it shows that there is volatility within the market to push the price down, and therefore we could get a reversal into an opposite direction, which is the uptrend. So the other way, so in recap, how to trade this channel is to wait for the price to hit the different levels of support and resistance. After creating these confirmed support and resistance trend lines, okay, we have trend lines, the upper and the lower one, support and resistance. So wait for the price to hit the support, make a buy trade, and then target the resistance. When we hit the resistance, you target the support, then like that. So when the price breaks above this resistance, it shows that we can either get a retest or sometimes no retest. Okay, and then you make a buy trade. If there is a retest, still we can make a buy trade, or it can break below this support level to create a continuation signal, and therefore we make our short trade. So that is how we trade these channels. Thank you so much for watching this video. Do not forget to subscribe to the channel for more videos like this, and for support, I'll see you in the next video. Bye bye.